Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So welcome back. This is the fourth episode in the Mohnish Movember series that we're doing right through the month of November on this channel. Basically, this series is all about me trying to replicate the Mohnish Pabrai moustache, and once a week we're doing videos on lessons from Mohnish Pabrai, all about investing. So it's for a good cause. Through the month of November, I've set the goal of raising $1,000 for the Movember charity. I'm taking donations from yourselves, and you've been very generous so far, and we'll get into an update on that shortly. And I'm also personally donating all of the ad revenue from these videos. Now in this video, we're going to be talking about 4 of Mohnish Pabrai's best investments ever. Last week, we talked about a couple of his big mistakes where he's lost a lot of money. In this video, we're going to talk about some of the success stories. And frankly, there were way too many to pick from. So I have managed to narrow it down to 4, and I've tried to pick sort of an investment in each of the various categories that his investments kind of fall into. So we're looking at anything from low risk, high uncertainty investments. We're looking at a 100 bagger that he made, an investment in India. We're looking at a PE of 1, and we're looking at where he captured upside without downside during the tech bubble. So whole mix of things in there. We're going to look at investments where he's made massive returns on a percentage basis over a longer period of time. We're going to talk about investments where he's doubled his money in a short space of time, and hopefully you can learn a few things from each of these success stories from Mohnish Pabrai. Now, before we get into that, I do want to give a bit of a fundraising update. So if you want to jump straight to the different investments, they will all be timestamped through YouTube, sort of down below me here somewhere, so feel free to jump through to that. But let's get into the actual Movember fundraising update so you can see kind of where we sit with that. So in terms of the Movember fundraising for mental health and suicide prevention, spoiler alert, we've met the goal already, and that is phenomenal. I think every single one of you that has supported the channel, supported the videos on the channel, I should say, and who've actually donated directly as well. It's been, it's blown me away, frankly. I was thinking at the start of the month I would set the fundraising target for maybe $500. I thought, to hell with it, let's aim for $1,000, and we've already by far ticked that off, and we've still got about 10 days to go in November. So thank you. If you do want to support, again, link will be down in the description. Let's try to keep the momentum going, and hit like and watch to the end of the video. That helps push the video to a wider audience and all that sort of stuff. So in terms of the donations that we have had since the last video, we've had our biggest donation so far, and that came from Brad Kellner. So Brad and I have collaborated on YouTube before, so definitely go out and check his channel out if you haven't already. So Brad donated $291. Says, I've been looking for a good cause to donate my first YouTube paycheck. So super generous, and I really appreciate it, Brad. $50 donation from Kurt. Kurt was actually a former flatmate of mine down in Christchurch, so thank you, Kurt. We have a $50 donation from Sam. Thanks for the awesome content, mate. Keep it up. All started with this channel. Now I'm in the middle of Phil Town's 3-day workshop. Good luck for the rest of the month. Cheers, Sam. That is amazing. Thank you, Sam. $100 donation from Karan. Love the initiative. Definitely check out Karan's channel as well. Also has very similar philosophy to me in terms of making his investments. $130 donation from an anonymous supporter. Keep up the good work, Tom. Really appreciate your YouTube videos. Another anonymous donation of $50, and then finally we have a $35 donation from myself. So I'm donating all the ad revenue from these videos. If you look at the analytics from the last video, which I'll put up somewhere here, you'll see that we raised, I think it was about $33. So again, I've kind of rounded up to 35, and that takes us to a grand total of $1,486. So we're close to 50% over our target already, which I'm just completely blown away with. So fantastic to see us putting all that money towards a good cause. Again, if you're interested in contributing, that would be super appreciated by myself, and the link will be down in the description below. But for now, let's get into the video topic for today, which is Mohnish Pabrai's best investments ever. So the first investment we're going to talk about from Mohnish Pabrai is a business called Satyam Computer. Now this is an Indian investment. Again, I'm reading notes down here, guys, so apologies if I'm looking down there a whole heap. So this was a stock that Mohnish Pabrai actually talked about in one of his Boston College presentations. So I'll try and leave the link in the description down to that as well. Basically, when Mohnish Pabrai was first discovering this whole world of sort of value investing and Warren Buffett, he'd recently sold a big chunk of his IT business, and the way he described it at the time is he had $1 million that he sort of didn't know what to do with. He'd just discovered this world of Warren Buffett, and he wanted to put that $1 million into sort of 10% bets, 10% portfolio kind of investments, and he wanted to put a chunk of those dollars to work in India. There were some Indian companies he was interested in at the time, and Satyam Computer was one of those. Now at the time, remember we're talking 1994 here, it was actually really difficult for US citizens to invest in India. So Mohnish Pabrai, in order to execute some of these trades, had to actually physically travel to India in order to make this happen, and he was pretty skeptical about whether he'd actually be able to ever get his money back. So for that reason, he actually limited the amount of capital that he deployed in these Indian stocks. He invested in 3 or 4 of them from memory, and about half of the amount of money that went into those Indian stocks went into Satyam Computer, which was in this case about 15,000 US dollars. Now at the time, Satyam Computer was trading at about $45 a share. That's if we work backwards and adjust for several sort of stock splits and things that happened during the holding period of Satyam Computer. And in terms of the investment case, basically Pabrai was familiar with the business from his own IT services company, who was familiar with what the company did and with its management. When he looked into the stock, he found that the stock was actually trading at a price that was below the real estate assets of the business. So you got the software company basically for free. If you just backed out the value of the real estate, you'd basically gotten all your money back. So he was investing in this business basically for free, and that's where he put a good chunk of this money towards. Now, in terms of actually buying the stock, it was a really interesting process. Like I said, Pabrai had to physically travel to India, and then when he bought the stock, they actually sent him physical stock certificates. Now, if you've bought shares in any company in the last few years, you probably know that you just do it all online, and you know your broker tracks how many shares you've got and all that stuff. That's not how it worked in the 90s. He physically got sent these share or stock certificates, and he basically shoved them in the bottom drawer of his desk and said, I'll just own these forever, and maybe one day I'll have to try and figure out how to sell them. Now, if we fast forward a few years to around 2000, this is when we were right in the midst of the tech bubble, and Pabrai actually went back and looked at what was happening with Satyam Computer sort of 5 or 6 years right around the time this was happening, and he found that the price had gone up a ridiculous amount. So remember, previously we were looking at a business that was trading for less than the value of its real estate assets. He now looked in the year 2000, and the company was trading at north of 100 times earnings, PE of over 100, very, very expensive. And basically what had happened is, in the meantime, Satyam had actually spun off sort of a .com business separately. Now, Satyam didn't actually distribute these shares to its existing shareholders like in a typical spin-off. Rather, they sort of listed it separately and kept a shareholding in that new sort of separate company. But nonetheless, it meant that Satyam sort of being caught up in a .com was valued very, very highly. And when Pabrai actually looked at the value of his holding, his 15,000 US dollar investment had gone up to around $1.5 million. It had gone up 100x. So he contacted his broker in India, said that he wanted to sell all of his shares in Satyam Computer, sort of sent him his physical stock certificates, and to Pabrai's amazement, the trade was executed within about 5% of the absolute peak that Satyam Computer ever got to. That was converted to dollars that sat in his Indian brokerage account. It then got wired back to the US, which turned up the next day, and it all kind of went seamlessly. And all of a sudden, Pabrai had captured 100x in about 6 years, which works out at about 115% compounded over that 6-year period. So incredible investments in terms of a percentage return, still one of the best, if not the best, that Pabrai has ever had. Now, the next company we're going to talk about is a business called Silicon Valley Bank, and this was again through the .com bubble. Basically, Pabrai had a strong IT background, but he was a Warren Buffett disciple, and he wasn't going to get caught paying huge prices to buy into many of these .com companies. He knew that the internet was going to be very, very important in the future, but he didn't know who the winners were going to be. So here he was looking for a way to try and capture some of the upside of what was happening in the .com world. But like any true value investor, he was looking to minimize his risk of downside. So that's where Silicon Valley Bank comes into the picture. So Silicon Valley Bank was basically a traditional bank based in Silicon Valley, and it's actually still a public company today if you want to go and check it out. But they had one key difference in terms of how their borrowers were kind of setting up many of their loans. Now, you have to understand that around this time when share prices were just going up and up and up for all these .coms, that many many of these dot-com companies were just writing stock options left and right. They would, Pabrai describes it as, if someone worked at Google and their gardener wanted to get paid, they were getting paid in stock options. That's kind of how much, that's an exaggeration, a hyperbole of course, but that's kind of how much stock options were widely accepted. And basically Silicon Valley Bank was collecting warrants or stock options on many of their loans that they made to these tech companies. So although they didn't disclose who the companies were and how valuable many of these warrants were for a long period of time, Pabrai saw that this was happening. The company was actually talking about it, even though they weren't giving out, how much these things were worth. So he saw that they potentially could create a lot of upside for the bank. And in terms of downside protection, he was actually able to buy into this high quality Silicon Valley Bank at around a book value of 1, which is a reasonable proxy for intrinsic value for many bank businesses. So the way he saw it is that if these warrants were useless, he's still got a high quality bank that he's paid a reasonable price for, and if the warrants turned out to be worth something, that could propel the stock way, way north. And basically what happened is the latter. These warrants did turn out to be worth something. Now, basically Pabrai captured about a 2.5x in about 2.5 years, and it actually doubled again after that. So if he had held on, he would have captured as much of a 5x. He sold before that, but still a great return. And basically what was happening is Silicon Valley Bank eventually saw these warrants getting extremely valuable, started selling them, started monetizing them, and that was starting to flow through sort of the profit and loss or the income statement of the company, and it sent the stock way, way up. So again, a great success story from Pabrai. He captured a 2.5x in 2.5 years, which is about a 44% compounded return through that period of time. Now, the next company we're going to talk about is perhaps one of Pabrai's most famous longer-term holdings. It's a company that is in an extremely competitive industry. It has really tough economics for the actual business itself, but the company was so cheap and managed so well that he managed to produce close to a 30% return compounded over about a 7-year period. And that business is Fiat Chrysler. Now, Fiat Chrysler was one of these traditional sort of PE of 1 companies that Pabrai likes to talk about. So here's basically what happened. Now, Fiat Chrysler, back in 2012, when Pabrai first made an investment, was trading at about $4 a share, and at the time it was earning around $2 a share. It was trading about a PE of 2. Now, basically what was happening is that at the time there was a lot of fear still around the automotive business. In 2008, 2009, we had the global financial crisis and businesses like GM went bankrupt. So there was still a lot of fear around this particular industry and whether that could potentially happen again. So these shares were sort of beaten down. And then you had Fiat Chrysler themselves, the management at the time, Sergio Marchionne, coming out and saying that in 2019 or 2020, the Fiat Chrysler business could be earning $4 a share. Now, it doesn't take a great mathematician to figure out that if you can buy Fiat Chrysler shares for $4 a share today, and they're going to earn $4 a share in 2019 or 20, which remember is sort of 7 years into the future at this time, back in 2012, that if they can execute on that, then it's unlikely that if a business is earning $4 a share and it's growing up to that, that the stock is going to be trading at $4 a share. So that was Pabrai's basic investment thesis. And essentially, here's what happened. So over the following 7 years, Fiat Chrysler did eventually get to the point where they were earning about $4 a share, and the stock price went up to reflect that. If you look at a stock chart of Fiat Chrysler, you will see that the stock today is trading around maybe $15, and a couple of years ago at its peak, before Sergio Marchionne, the CEO, passed away, it got as high as about $25 per share. And that's not the only thing that happened with Fiat Chrysler. Now, when Pabrai first bought into this business, it actually had the business of Ferrari kind of embedded into it, and Ferrari was eventually spun out into its own separate entity, and Fiat Chrysler shareholders were given shares in Ferrari that got spun out, traditional spin-off. You get shares in Ferrari and you now own that business separately as well, and you can do whatever you want with those shares. Now, if we put it into sort of Fiat Chrysler share terms, now if you look at the Ferrari stock price, it's not going to be in these numbers because you had to own a certain number of Fiat Chrysler shares to get 1 share of Ferrari, but this is basically what it works out at. So Pabrai bought Fiat Chrysler around $4 a share. The spin-off that eventually happened in 2016, so for sort of 4 years into his holding, of Ferrari was worth about $4 a share. Now that Ferrari stake for Pabrai went on to double before he sold, and it actually has gone much higher than that, but that's kind of what happened in Pabrai's experience. Fiat Chrysler also paid a special dividend in 2019 of about $1.30. They also paid regular dividends a fair chunk of the way through, which come out to about $2.50 to $3 in total across that 7 years. And Pabrai sold his Fiat Chrysler stake over about a 1 year period. He didn't capture that peak $25 price, but he probably sold it anywhere from the sort of $12 to $15 range averaged out. So if you add all that together, he basically turned $4 a share into about $25 a share with his eventual sale, with the special dividends, with the Ferrari spin-off, all of that added together. And if you figure that out over a sort of 7 year period, that comes out to right about a 30% return over that period of time. Now, the final business that I want to talk about is IPSCO, and you may have heard me tell this story on the channel before because I think I've told it a few times now, but this is probably the best example I have of one of Pabrai's really successful, low-risk, high-uncertainty businesses. Now, IPSCO was a tubular steel company, and basically, if you know nothing about the steel industry, all you need to know is that it is very cyclical. So it goes through big swings in profitability, these businesses. They can earn a lot of money one year, lose a lot of money the next year, and it's very unpredictable. It's hard to get a gauge on what's going to happen next year or the year after that. But in this case, IPSCO was an exception. So although they were in a very high uncertainty industry, they were actually quite a low risk business at the time when Pabrai was making this investment. And that's because when Pabrai made this investment in around 2005, IPSCO had this unusual characteristic of having its revenues contracted for the next few years. They had several customers that had basically pre-purchased a bunch of tubular steel, and the numbers worked out like this. So when Pabrai made the investment, IPSCO was trading at about $45 a share. They had no debt, and they had $15 a share in cash. They also had these contracted revenues, which would flow through to the bottom line earnings and work out at about $15 per share for the next 2 years. So you have 2 years of earnings of $15 per share, gives you $30. You also have $15 a share in cash sitting there. So if you fast forward 2 years, you're going to purchase the business at $45, then in 2 years time, you're going to have about $45 sitting in equity within the company. So it meant that if all of that plays out, you end up with your $45, and then you also get basically all the plant, machinery, customer relationships, expertise, everything else within IPSCO for absolutely free. And basically what happened is about a year into this investment, IPSCO came out, they'd earned their $15 per share, and they also said we've actually got a third year of $15 per share sort of visibility now available to us. And after that happened, the stock basically went from about $45 a share to $90 per share, and a little bit after that, eventually a Swedish company came along and said we're going to buy IPSCO out for about $160 per share. So as soon as that happened, the stock went from 90 to about 152, I think it was, and Pabrai sold the stock for about $150 a share, and basically turned his $45 into about $150 plus a couple of dollars worth of dividends in the meantime. Captured basically about a 3.4x return over 2 years, which is what that works out at, which is about an 85% per year compounded return. So there you have it. Those are 4 successful investments from Mohnish Pabrai. I do hope you enjoyed that a lot and learned plenty from it. If you did, please hit like and hit subscribe. It would really help me out and also help the Movember Foundation as well, because all the ad revenue from this particular video will be going towards that. So I appreciate that very much. If you're interested in donating to Movember, down below that will be the first link in the description. So I'd super appreciate that. But that's all from me today, and I will see you in the next one. Cheers. Mo check.